The buzzword in many commercial real estate circles over the last economic cycle has been affordable housing. As costs of living have continued to increase, developers, government officials, and special interest groups have been fighting to figure out how we can continue to provide affordable and attainable housing for those in need. But no one is talking about the affordability crisis for entrepreneurs and startups. The cost of commercial space has also risen dramatically, sometimes 50% or more in some cases around Nashville in just the last 10 years. Micro units may be a way for entrepreneurship to continue thriving in an ever more expensive environment. Here's why I'm focusing on micro units for office, retail, and restaurant space. First, what are micro units? Maybe there's an official definition out there, and if there is, I just don't know it. But micro units are any type of commercial or multifamily space that is smaller than the market average. And that, of course, will vary from market to market. In Nashville, for example, 500 square feet could be considered a micro unit, whereas New York City might be closer to half that size. Micro units are well known throughout the multifamily world and are starting to catch on in commercial space throughout the country, though they've already been prevalent in high-density urban cores such as New York City, Chicago, and LA for quite some time. Their size alone promotes affordability. The smaller a space is, the less it will rent for per month compared to an otherwise equivalent but larger space. Basic economics, right? But for some reason, outside the most dense urban cores in the United States, smaller commercial units just haven't been readily available. Developers either haven't seen the demand for these units or just haven't cared to serve them, considering how small these units can be compared to the rest of an office building or a shopping center. In fact, until this past year, the smallest restaurant space that we had worked on was around 800 to 1200 square feet. My latest project, The Wash, is a car wash conversion into 6 micro restaurants, each of which is around 380 square feet. As the landlords, we benefit from being able to charge a premium price per square foot, considering how small the units are. But the tenants also benefit because their total monthly overhead is significantly lower than if they opened up a traditionally sized restaurant. Micro units also don't require any government involvement. Affordable housing is often too complicated for most developers to deal with. Just about every developer I come across is interested in providing some sort of affordable or attainable housing, but has avoided doing so because the process to actually get approved for officially designated affordable housing is ridiculous. And since developers have to pay market rates for land, development, and construction on a project, they have to ask market rates for their units. So without that government involvement, it's nearly impossible to provide that housing. Micro commercial units, on the other hand, require no government involvement or need for tax breaks or assistance, since they will actually rent for above market rates on a per square foot basis. Now, let's use my units at The Wash as an example. Here, the rate was all bills paid or full service gross, which meant that we sent our tenants one bill and we covered the utilities, common area maintenance, etc. So at 380 square feet, we charged around $100 per square foot, which came in at around $3,250 per month all in. Sure, $100 per square foot sounds like an incredibly high number for Nashville. It's around 2.5 to 3 times the market rate for restaurant space. But on a monthly basis, their total rent is only $3,250, which makes these spaces the most affordable restaurant spaces in Nashville. We were able to provide affordable and attainable space for these restaurateurs without years of applying for tax credits and banging our heads against the wall. They also provide more flexibility. Commercial leases can be intimidating, especially for the startup entrepreneur or small business owner that isn't sure which direction their company will take or how they will grow in the near future. So signing a long-term lease and making such an extraordinary commitment just doesn't make a lot of sense. Landlords, on the other hand, prefer to have these long-term leases because it gives them more stability in their investments and allows them to recoup any expenses of reletting the space, such as commissions, commercial build-outs, etc. Micro units provide far more flexibility to both the landlords and the tenants. Landlords can charge a higher rental rate per square foot while providing a less expensive alternative to traditional commercial space. They can also fit more tenants into a property than they could have before, which helps them diversify their risk across more income sources. Tenants often have the flexibility to sign 1-year leases or less, instead of the 3 to 5 year leases that are more common. They also benefit from lower monthly overhead and only have to take the space they need. Micro units also lower the barrier of entry. With lower overhead and more flexible lease terms comes a lower barrier of entry for startups and entrepreneurs. And we've all seen what a lower barrier of entry can do in the commercial realm. Take food trucks, for example. The food truck craze hit Nashville in the last 10 years and opened the doors to many creative concepts that we may have never otherwise seen. For example, one of those popular restaurants in the last decade is the Grilled Cheesery, a group that started off in a food truck that serves some damn good grilled cheeses. Had they needed to come up with the capital to open a full brick and mortar restaurant at physical location first and convince investors or lenders that a grilled cheese restaurant would be successful, they may not have ever gotten off the ground. Micro units provide a more affordable first step option to creative startups in a very similar fashion to food trucks. Not to mention the fact that if an entrepreneur wants to just test a new concept or venture without absolutely breaking the bank and signing their lives away, they can now do it. Now, they've also been relatively COVID-proof, which is very important in a post-COVID world. Across our entire portfolio of commercial real estate in Nashville and Chattanooga, our micro units picked up in leasing velocity through the pandemic. They actually leased faster than they were before. We had one deal where we signed 6 leases from March through September before we ended up getting an offer to sell that building. Not a single other building in our portfolio performed like that, since most businesses had employees working from home or they were a little bit cautious to lease new space. In our experience, these 1 to 5 person teams that occupy micro units either have to, due to the nature of their job, or prefer to work out of commercial space and not from home. Okay, so now that you know why I'm so focused on micro office, micro retail, and micro restaurant concepts, watch this video here on ghost kitchens, which are the new micro restaurant craze. They're picking up in steam in the restaurant industry and are poised to take off over the next 5 to 10 years. I'll see you there.